All right, family, here we go. So this is my breakdown on how I caught 259 points today on NAS 100. I typically trade futures, so I'm used to NQ, but they don't really move too much different. Just different platforms. Now the spread is different between trading Forex and trading futures, but no biggie. So I'm gonna show y'all my little breakdown. Go ahead and mark out my sessions. 3 a.m. London. Boom. And then I'm also going to mark out New York Open, which is going to be here at 9:30. And from here, what am I looking for? I'm looking for my London high, which is here. I do this one typically off of the candle close. I'll mark it at the highest close, not the wick. Al Brooks says, you know Al Brooks? Yeah, but Al Brooks said that the institutions, they're looking at closes more than they're looking at wicks. So, and then I also had this bottom here for London, even though this is obviously lower, a little bit higher or lower, whatever. And then I had the Asian high, which will indicate here. And I'll put that one in black and in dashed lines because it's already been liquidated. So, let's see, 922. Okay, so it's 922. I have already showed up to the markets, and I had to say I think I took like one or two losses already, but super small, super small. So we're gonna fast forward a bit. We're getting to the open, and then what I was looking for, first off, we have a great rally from the night before, starting here, the night before. Great rally, bullish, 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 bullish. And what we thinking? Liquidity, 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 liquidity. All building up here. And then London end up doing the same thing. And then it consolidated. So when we're thinking in probabilities, what is the probability that New York is going to open and continue higher? What's the probability that New York is open and going to continue down or going to reverse? I'm thinking reverse because there's just too much money down there. So before I even enter, and I could do this to make it a little bit more realistic. Let's go back 5 minutes. We'll set and take my trade right away. And then just go by 10, every 10 seconds. All right, cool. So clock is ticking. So I'm looking at the 1 hour to see what's happening here on the 1 hour. So we'll notice on the 1 hour, we have a bearish trend, but we got this big bullish pullback. Okay. So now we're gonna wait. We're inside of a fair value gap, which is very important in that 1 hour, and we're gonna wait. So boom, market has opened, and what do we see here? I see a bull run, but what did price do? Price just touched the open right here. And then it hit it back down. And by this time I'm thinking manipulation. Manipulation didn't even cross this wick right here. So there's liquidity sitting on top of this wick. But also there's tons of liquidity going down here. And once I noticed that price rejected off of this area, I said something's not right because there's much liquidity. There's liquidity here and there's a ton of liquidity here. And if they push there, I'm thinking ICC, indication, correction, this our correction. Then we're gonna have that continuation. So here comes that continuation at the open. Well, the open is far gone, but you can still count this as the open. That's not important. Why? Because this is already swept. It was already swept. Now, there is some strategies that's telling you that because it revisited this this resistance before, you should expect some bullish activity. So boom, it revisited and we're getting some bullish activity. So I'm rocking with that. I'm patient right now. And we're just letting it go, giving it the candle, boom, boom. Okay, now we got that push. It took liquidity. Now I'm saying to myself, okay, I'm not going to enter right away because you don't want to be the first to buy once it breaks here. You want to see more supporting candles that's going to be for more bullish action beyond this point. So we get that. And at this time, I'm a little curious because boom, we get that push. Now we get this candle, but I'm gonna pause it right now because I didn't mark this part out. I had already marked out this high right here, and I also marked out this high. And then there was one more because there was one that was higher. It took out these. And then I did the next nearest one, which is right here. Which, I mean, this is technically one too, but I ain't worried about that one. It's just experience. So boom. All right, here we go. So I asked myself, we're here. What's the probability that is gonna push higher? And what we didn't get what's it doing right now? If it was strong, it would have continued, right? It wouldn't be playing around right here. I'd like to see it. Boom. Okay, so we get that. Now, this is what's critically important right here because this is my entry. If you're still with me. This was my entry right here. I'm gonna zoom in. Run this 5-minute chart. Okay. Price is dancing. What I'm waiting for right here is I want to see this bar go below this low. So I'm waiting for this bar to go below this low because that's going to give me confirmation that I'm looking for. My first confirmation. We get a bit of a close right here, and it's beautiful. Now, this right here, I'm gonna pause it real quick. I'm actually put it in real time. This is where now you really got to pay attention, all right? Now, we got a strong signal bar right here. Very strong. Liquidity is swept. Is now 10:01. What I did now is I went to look at the 1 hour. What do you know? The 1 hour candle finished with a doji, and a doji that did not even break above the wick of that high. That's important. So it's not showing anything strong bullish. The 1 hour pretty much trumps everything. And now I'm like, shit, okay. I want to tell y'all the little secret sauce about my entry method, but I'm gonna save that for another video. But you'll see. So now I'm waiting. Go ahead and speed this up a bit. 10 seconds. Boom. There's my entry. All right. Now, I'm gonna pause it because originally this is my entry. You see I'm down right now. It's 10:02. I originally put my TP for this low, for these London lows, but we must understand that the market has inertia. And we all know about inertia. One of the laws, the object in motion stays in motion. So all I was banking for, I had my stop loss up here. I have my stop loss here indicated in, let's do this one indicated in purple. never blue. Shit kind of hard to see, but stop loss in blue. And my original TP was here. I'll just put it under so we can see. All right, now we let it run. Speed it up a little bit. Okay. Beautiful, strong candle. Beautiful, strong candle right here. This gave me a lot of confidence that I needed. So I waited. I got that strong candle, and then I got the close. I got some activity below it. That's what we want to see. I took this as liquidity being swept. So now we're getting this push here, and now I just brought my stop loss to break even. Pause, get this shit going fast. And then I brought my TP down originally down to here. All right, made it even with this low right here. So boom, while that's happening, price is going, and while price is going, it cleared it. It cleared it right here. So let's bring it back. Price cleared it, and I was like, ah, okay, I'm making some money. I had a goal. It's not my TP, y'all. I had by this time I adjusted my TP to believe it was like right here on the 1 hour. I put it here. Put it like down here somewhere. It's like ridiculous. All right. Boom. 1 hour. There we go. And what I done from there, this is all like, you see this shit was 30 minutes. 30 minutes. 30 minutes of straight trade management. So go back to the 5, and I just just kept bringing on my stop, trailing the stop, trailing under it, and then I'm putting it under here because that was the last close before this move. Continued, continued, and I just continued to trail it. I'm comfortable now because as y'all see, I'm up. I'm comfortable, but you have to watch how you trail in these things, bro. You'll get stopped out way before you're like to. And so what I did, now I'm itching because I'm like, okay, I'm up $100. My original goal was only to get like 80 something. Well, it really was to break even from my losses from the day was like 20 something dollars, but I said I'm gonna run with it. So I'm getting more push. It's beautiful. I'm under here. This might not even be the TP. You'll be able to see when it is. But it was like 103. It didn't touch this TP, so it's gonna be a little bit lower. All right, boom, there we go. And so now I'm nervous, right? Because I wanted to hit right here, but it's not. We're getting some weakness. We're getting some weakness. Why are we not pushing more down here? So what I do, I wait for that candle to close. I'm trailing because I'm like, okay, I'm up a good bit. You feel me? I don't want to lose all that. Every dollar counts. So once that happened, I brought it down to here. I said it may not hit my TP. I was waiting, waiting. As y'all can see, that's my original TP right there. And then boom, it stepped out. And that was the trade. I didn't use no order blocks. I didn't use no fair value gaps, which is what I do. It's what I do. I use them, but today I didn't even use none of it. I pretty much just used like intuition, basically. Like, cause come on, bro, think about it. Look at all this. And look what he did. Some people would say, well, you want more confirmation. You want more confirmation, right? You want to get that breaker structure. Maybe right here, because it's the last up move. You know, we got that candle for the down move. Well, in my eyes, I'm like, bro, if I'm anticipating it's gonna happen already, you feel me? Why don't I just take the chance? You got to take the chance. And There wasn't no strategy that told me to take this entry. I had to learn this. And I said I'll do a video one day on this entry strategy that I created. But I'm signing out. That's all I want to show y'all. This is the breakdown, January 2nd, my first day on my live account. And I'll make more videos in the future. For now, learn your candlesticks, learn your market structure, and peace.